Joining us on board, Ravindra Pisharody, who is the ED Commercial Vehicles at Tata Motors. Ravindra, hi, morning. Good to chat with you. Now, on the ground, explain to us, how has demand really been panning out for the medium as well as HCVs? And do you think after the initial green shoot, things have not been that great since the last 2 to 3 months?
So I think now that we come to the end of the first quarter of FY16, we can sort of take a look back at how things are shaping up. And one way to describe it is that more or less the same momentum as FY15 continues. And from a commercial vehicle perspective, what I really mean is M&HCV growth continues. So we saw fleet replacement kicking in to revive the growth in the beginning of FY15. So that's continuing. The expectation that other segments would start recovering at least to the end of last year did not happen. And we are not seeing much of that in this quarter also. Though I must say that some other segments have also started coming into the positive. So buses, ICVs and LCVs, which till last quarter of FY15 was still on a negative track, have started showing positive. So we really now wait to see the SCV and pickup segment, which in terms of volumes is a very large part of SCV. Though obviously revenue-wise it will not be that large. But that is still not showing signs of recovery. That's a bit disappointing because in a way we expected that towards the later part of last year. But we hope now, soon after the monsoon with the festival season kicking in, that will start changing.
But has there been issue due to lack of liquidity and finance availability to truck buyers recently, as banks and FIs have been cautiously approaching the segment as bad loans are really on a uptick here?
So I think there's no lack of liquidity. Actually, availability of liquidity is quite good. In fact, the big truck fleets are being chased by various financiers because M&HCV is seen as a safe portfolio because the trucks are easy to locate. And these fleets are also bothered about their reputation. There is one part of M&HCV which is struggling a bit because of the continuous recession for 2 or 3 years. Some of the fleets, their balance sheets are not looking good. So some fleets are having difficulty in getting financing. So if they want to buy, say, 100 trucks, they're getting a loan for 25 or 50 trucks, not for the 100. But that's a relatively small part of the industry. By and large, trucks are okay. I think the bigger problem is in the SCV and pickup segment, where the prospective buyers are people who come from the semi-literate or illiterate category, trying to earn some livelihood by operating these vehicles. So I think the recent experience of the finance companies over the last 2 years, where there's been a lot of default, has led the finance companies to reduce the loan rates. So now almost the peak loan is about 80-85%. So if you look at the on-road price, including registration and insurance, for a small vehicle, such a customer is required to put 1 lakh rupees almost down payment, whereas 3 years ago it was 40,000 rupees. So that is actually effectively a non-starter for many buyers. So unless that improves also, I mean, it can improve in 2 ways. One, the economy starts improving a lot and the utilization of these vehicles improves and the financiers start getting more confidence. The other way is for financiers, disbursement is their business. So they start taking a bit more chances in the second half of this year. That may happen. We are looking forward to that. We engage a lot with financiers and we're trying to persuade them to give somewhat better terms, if not the very liberal terms which were given in FY12-13, at least somewhere in between, and not swing to the other side of the pendulum.
Which sectors do you think will drive the recovery for the CV business in the coming quarters?
So I think the infrastructure segment, construction and mining, is going to play a big role because even right now as we speak, we are talking about 20% plus growth in M&HCV. That's completely coming from the cargo segment. So long haul trucks. The construct is actually not growing at all. It is 0 to slightly negative. Now that is in good times 1/3 of the total market. So I think the government budget provisions which have been made on infrastructure investment, power, telecom, and the easing up of mining, all that will result in a good commodity transportation requirement. And I think that is going to be quite critical for M&HCV to come back to the sort of fast recovery which we all expected and which we have seen in the past. Whenever there is a down cycle, the up cycle is equally fierce. We are not seeing that fierce up cycle right now.
So, I mean, is the discounting and pricing expected to be more stable than in the coming quarters?
Well, we hope so. I think the discounting may not go away so easily because if you look at the period 2008 to 12, a lot of M&HCV capacity came into the country. Expansion of existing Indian players as well as new people coming in. In fact, in the very bad years of 13-14, the total capacity utilization of M&HCV was about 30-35%. It's probably gone up by 10-15%. I mean, we are somewhat better. We are in the 60 to 70% in the M&HCV. But as long as there is so much capacity underutilization, and there are many manufacturers just trying to get a foothold, they have less than 2% market share. So I think discounts will be there unless the recovery is very strong and the waiting period starts, then the discounts will go down. We as a principle have actually capped our discounts. About a year ago, we capped our discounts at a certain level, but we find that many of our competitors are continuing to discount, but we are not falling into that because as market leaders, we could be guilty of driving the discounts up further. So discounts are here for some time unless the market recovers very strongly, but we have definitely capped our discounts and we believe we can retain our customers even with that.
Do you think government orders and government spending has to do little with more aggressive for the CV sector volumes to pick up, and any recent orders that you currently have bid for?
Government orders for CVs in particular are relatively small, and we are seeing some easing up of paramilitary and defense orders. We have got some decent orders in the last 6 months. But I think the bigger issue on government spending, I think a lot of analysis has been done, and what I'm saying is not completely my thinking. Private sector investment has been quite high in the period from 2002 to 12, and many of these investments are not fully getting utilized in terms of capacity. So I think there is an expectation that the next wave of growth has to come from government spending, which I think is also something which the government is planning to do. We just need to see that translate into action faster.
How has the performance of the export market been, and what are the growth plans out there?
Exports have been a high point. In fact, if you look at our April-June numbers for this quarter, our export growth is very satisfying. It's about 37-38%. I have been saying for some time now that growing exports fast is a major strategy for us. We have the products, we have the markets, we are adding new markets also. So we have said that we want to get to about 3 to 4 times our 2014 levels of export. We are on our way, and I think that's something we look forward to.
Mr. Pisharody, what about the new launch pipeline? What's in store from Tata Motors?
So when you talk about new products, it's always a very difficult question to answer in the sense that if you look at our portfolio, quite unique, from a 2.5 lakh case zip going up to a 60-70 lakh bus or truck, and we span all the segments. And there are various competitors focusing on bits and pieces here and there and not really full range. And then you add the export plans where at least a number of countries are LHD, some are RHD. India is moving from BS3 to BS4 in October in various markets. So actually the number of variants we have to introduce in the current year is easily exceeding 100. That's quite a mind-boggling number. It's quite a challenge for our product development and project team, but they are at it, and we will introduce about 100 products in the current year.
Okay, Mr. Pisharody, thanks so much for taking the time out and speaking with us today.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.